You're standing in line for coffee, and you do the thing you do 50 times a day without thinking. You open your banking app. There it is, $2,314.06. That number feels like a fact, solid, measured. It feels like your money is somewhere. A stack, a drawer, a slot with your name on it, and the app just walked over, counted it, and came back to tell you the total, $2,314.06. That's how much is there. Here's the strange part. That number isn't measuring anything. There is no drawer. There is no stack being counted. The app didn't check on your money because your money, in the way you're picturing it, does not exist and never did. By the end of this video, you'll know exactly what that number actually is, why the bank is allowed to keep zero, literally zero of it in cash, and why, despite all of that, the machine behind the little number is one of the most reliable things humans have ever built. So let's start with the question you've never actually asked. When you look at that balance, what are you looking at? The picture in your head is a good one. You've had it since you were a kid with a piggy bank. Money is a physical thing that lives in a physical place. You hand it over, someone tucks it away, and it waits for you. Loyal, untouched. Yours? So when your paycheck lands, your brain files it under that picture. Somewhere in the bank, behind the counter, down a hallway, inside the big round door, there's a space that belongs to you. A little cubby. Maybe it has a velvet rope. Maybe a tiny bouncer. And inside sits your $2,314 in cash, exactly the bills you deposited, waiting for the day you come back to claim them. It's a comforting picture. It's supposed to be. Every bank lobby you've ever walked into, the marble, the hush, the heavy door, was designed to make you feel that your money is a thing, in a place, being guarded. Now let's walk back to the counter and ask for it. All of it. And watch what the number actually does. Here's what happens. The teller doesn't walk to your cubby because there is no cubby. The moment you deposited that money, it stopped being yours in the way you think. Legally, the cash became the bank's. What you got in return was a promise. The bank's promise to give you that amount back whenever you ask. And that promise is what your balance is. Not a measurement of cash in storage. A score. An entry in a database that says, in effect, we owe this person $2,314.06. Look at where that number actually lives. It lives on the bank's books, and on a bank's books, your savings are not listed as something the bank has. They're listed as something the bank owes, a liability. Your money, the thing you feel so sure about, is a debt with your name on it, sitting on the wrong side of somebody else's ledger. The app on your phone isn't a window into a vault. It's a receipt for an IOU. And once you see the number that way, the obvious question gets very loud. Very fast. If the bank doesn't keep your cash in a drawer, where did it go, and how much of it does the bank keep at all? Okay, you think, fine. The bank lends my money out, that's the whole business, but surely there's a rule. Surely the bank has to keep a big chunk of everyone's deposits sitting in the vault just in case. You even remember the number from school. 10%. The bank keeps 10, lends the other 90. The famous 10% rule? Two problems. The first one is small and annoying. That rule, the clean 10% version you were taught, was never actually true. The real requirement was a tiered, fiddly thing that most deposits barely touched. But forget the fine print because the second problem is the one that matters. In the United States, the amount a bank is legally required to keep is 0. Not 10%, not 5%, 0% since March of 2020. The Federal Reserve set every reserve requirement to 0 and never turned it back on. And here's the part that rewires your whole picture. When a bank makes a loan, it isn't reaching into a pile of everyone's deposits and handing that cash to the borrower. It's doing something stranger. It types a new number into the borrower's account. That's it. The loan creates a brand new deposit that did not exist 1 second earlier. Banks don't lend money out. Banks create money by lending. This isn't a conspiracy theory. It's how the Bank of England, a central bank, describes its own system. So the deposit you were so sure was sitting in a drawer? There's no drawer, there's no 10%, and most of the money in the whole system was spoken into existence exactly the way yours was, as a number, as a promise, as a row. Which should terrify you. If your money is just a promise, and the bank keeps none of it in reserve, and most of it is conjured numbers, then the first morning everyone shows up wanting cash, the whole thing should collapse. So why doesn't it? Why has the ATM never, not once, looked at you and said, "Sorry, we're out"? Because how much cash is in the building was never the thing holding it up. What holds it up is liquidity, the bank's ability to get money the instant it's needed. And a modern bank manages that like a weather forecast. It knows from millions of days of data, roughly how much you and everyone like you will pull out today, this weekend, this holiday. It keeps enough on hand for that, and not a dollar more. And on the rare day the forecast is wrong, a surge, a scare, a sudden rush, the bank doesn't turn to its vault. It turns to the Federal Reserve. Every U.S. bank has a standing line to the Fed, an overnight lever it can pull to borrow cash on the spot against the assets it holds. The Fed is the lender behind every lender, the floor under the floor. And this is the part almost nobody sees. Every single night while you sleep, an invisible tide moves under the whole system. Trillions of dollars slosh between banks and funds and the Fed, borrowed at midnight, returned by morning so that every account lines up, every promise is covered, and every ATM you walk up to tomorrow can say the only word it's ever allowed to say. Yes? And the Fed sits at the center of that tide holding two levers. One sets a floor, so overnight money can't get too cheap. One sets a ceiling, a standing offer to lend on demand, against good collateral, so it can't get too expensive. Rates stay pinned inside that channel night after night and the plumbing just works. Here's how serious they are about that ceiling. At the end of 2025, the Fed took the last limit off it. The daily cap on how much it will lend overnight, gone. The backstop behind your $20 bill didn't get smaller as the years went on. It quietly became bottomless. You will never see any of this. That's the point. The whole magnificent, humming trillion-dollar machine exists so that the number on your phone can be boring. One last thing, in case you're still holding onto the drawer. Add up all the physical cash in America, every bill in every wallet, register, and vault, and it comes to about $2.3 trillion. Sounds enormous. But the total pile of American money, counting all those promises in all those accounts, is around 23 trillion. So actual touchable cash is only about a tenth of the money. The other 90% has no physical form at all. It's rows. It's scores. It's promises, like yours. And it gets stranger. The Federal Reserve estimates that something like half of all U.S. paper cash isn't even in the United States. It's overseas, in mattresses and safes on the other side of the world. So the drawer you pictured, with your specific bills in it, even the cash that does exist was mostly never going to be near you. The system isn't hiding your money. There was simply never a version where your savings were a stack of paper with your name on it. So, tomorrow morning you'll stand in a line and you'll open the app and there it'll be $2,314.06. Only now you know what you're looking at. Not a photograph of money in a drawer. A score. A promise, written on someone else's books, backed by a bank, backed in turn by the largest financial machine humans have ever built. A machine whose entire job is to make sure that number is always, quietly, there when you need it. Your money was never a thing in a place. It's a promise with a scoreboard. And now you know who keeps the score.